I just opened it up. Welcome, everybody. Thank you so much for being here. We'll give you a second to come on in and get settled down, and then we'll get started. No Eddie or Milton today, so
That's okay. We're here. We're going to take good care of you guys tonight. We have a very special guest. We'll give it to about 6:01 and then I'll do the introductions and we will get started. We want to be respectful of your time tonight. Welcome in, welcome in. So good to have you all here. Thanks for spending this Wednesday night with us. It is 6:01. We're going to get started. Welcome to the road ahead. Auto financing, vehicle protection, and summer savings. We are here for you if you are needing a new car, a used car, need to refinance your car. We've got your back. We want to make sure that you get the best deal, the best rates, and that you are taken care of with a smile. So, my name is Kim Fridley. I'm the Membership Development Analyst here at the Credit Union. Also with us tonight, we have Carrie Lazar. Carrie is our expert content queen. She's responsible for all these wonderful slides. Thank you so much, Carrie. She is our senior communications manager. And then our special guest tonight, uh, his name is Mr. Elton Roshi. He is the director of our consumer lending department. So he leads all the amazing loan officers team that will help you through the process, no matter where you are in the process. They are absolutely amazing. They will take very good care of you. He has a wealth of knowledge. You're in for a real treat tonight. So without further ado, thank you, Elton, and take it away, buddy.
Good afternoon, good evening, everybody. Thank you for joining us for another webinar. Yeah, just want to point out, you probably see my headset here and headset here. My microphone is not working properly, so I want to make sure that I am
I'm
getting this
sorry,
correctly.
Elton. I'm not sure if it's just me, but you sound really choppy.
Yeah, I can't understand you at all.
But you were
Can
fine
you?
earlier during the practice
Yeah, you were fine
session.
earlier. What
Can you hear me
about
now?
what about our attendees? Can you put something in the chat?
Somebody said the
Oh,
same.
okay, okay. Sorry.
All right, let me
Maybe if you turn
fix
off
that.
your video, it'll save some of the bandwidth and help.
Yes, let me.
Thank you guys for your patience. We will get through this temporarily and get right back to you.
Can you hear me better now?
No,
No, unfortunately.
Can you hear me better now?
no.
Sorry. This.
Do you think maybe if you
That's
go out and come back in, that might help? And thank you all for your patience. We appreciate you. We have a great, amazing webinar for you tonight, and Elton is the expert. We're so glad that you joined us. Everybody put in the chat where you're tuning in from. I love to know. And I don't know what your weather is, but I'm in Virginia and it's been actually a really nice, cool June. Just so unlike June in the past years. Usually we don't even see spring. It goes from winter to summer and it is hot. So hopefully wherever you are, the weather is wonderful.
Iowa. I'm in Illinois and it was cold today. I had to turn the heat on. Brooklyn, New York,
We got
Richmond,
Iowa in the house.
Las
Oh, Las
Vegas.
Vegas. We
Can we
love,
come
my husband
visit?
and I love Las Vegas.
I love Las Vegas.
We
But
love it. Richmond, Virginia. Oh, that is so awesome. We're in Virginia. I'm in Virginia, not Cary. I'm in Virginia as well. Oh, I would love it. I don't like heat though. I don't do heat well. Thank goodness for air conditioning.
Can you guys hear me now?
Yes.
Yes.
Perfect.
All right.
Man.
Thank you for your
Welcome back,
patience.
Elton.
Yes, thank you for your patience. I really appreciate it. So yeah, so today we're going to be talking about the road ahead, talking about auto financing, vehicle protection, summer savings. We're going to go into some smart ways to go about when you're looking at purchasing a vehicle as well too. So and then we're gonna do a couple interactive polls, and these are just for engagement and fun. So we will not be tracking or collecting, just so we can get some see if what you as consumers are doing on your end. All right. So, in today's market, I'm sure everybody has seen what is going on with the prices of vehicles, both new vehicles and used vehicles. And right now, one in five buyers, one in five consumers, their car payment is over $1,000. So that's 20% of consumers in America are paying over $1,000 per month. And I never thought we would ever be in this boat, because, it's almost like a well, I mean, now it's like more of like a half a rent payment or half a housing payment, with the way housing is as well. The average loan is almost $44,000. This is astronomical. I mean, not even 5, 10 years ago, things were, you could get a decent vehicle in the 20 to $30,000 range, and now just this is just the average. At the same time, the average down payment has gone down, because more people are financing larger portion of their vehicles, that they're purchasing. It also plays a part too, because it's so expensive. The down payment that you're planning to put down doesn't put a dent into it, um, as well. And perhaps, the most eye-opening statistic, as I said, is that down payment, and excuse me, it's the monthly payment. Uh, and this probably will continue to trend higher as vehicle prices remain elevated, and as more vehicles get more technology in them, it'll be more expensive in general, you know. So, these numbers explain, why vehicle decision matters more than ever. So you can make some smart buying decisions, and so you can manage the cost of ownership. So, today what we're going to walk through, and then I want to, before we get to the next slide, I want to share with you guys, so if you're going to be shopping for a vehicle today, which brand would you most likely consider? So, if you want to select the options right now, and your options are showing on the screen. But as that poll is winding down, I want to walk through some things to consider before you buy, before you finance, or protect a vehicle. So we got to put some numbers in perspective, and let's look at what the actual cost to own a vehicle is going to be. So let me close this poll. All right, so it looks like uh, Toyota is number one. And then we have a tie between Honda and Chevy and Ford. Oh, and then someone's purchasing an other. And then Ford, Hyundai, and Kia are are just not popular today with our audience, which is fine. All right. So the average cost of owning a car in 2026
is $11,577. This data comes from AAA's Your Driving Cost Study estimate. And this is data from last year. So, if we were to take into perspective, uh, what the gas prices have been in the last 3 months, I'm sure, that cost has increased somewhat. So hopefully, we'll get some reprieve in the future. But, in that breakdown, depreciation is your largest category where that cost is the highest. So typically, the average depreciation on a vehicle is about $4,334. That equals about $360 a month, or almost $100 a week that your vehicle is depreciating. So think of it in this manner. Open up your car window and then just every week throw out $100 bill, and then it just goes somewhere else. Fuel is another one. So the cost of fuel, gas, diesel, whatever your car takes. Electricity is also higher because the cost of and electricity has also increased if you have an electric vehicle. Insurance has increased tremendously. I can tell you, personally that, insurance is now averaging about $1,700 per vehicle, and that could be higher depending in the state you are, your deductibles and everything. And that's been increasing at a 10 to 20% clip, per year the last 3 years or so. Maintenance as well too, repairs, insuring, because you want to make sure you take care of your vehicle. So if you don't take care of your vehicle, then you may have higher repair costs down the road. Making sure oil changes are done, on manufacturers recommended. I know oil changes now are not cheap. I mean, I usually put my oil change is like $100. Then it used to be $20. Now it's about $100 uh, every every 5,000 miles. So those are the costs you want to think about. And then, some states have taxes. I know in the state of Virginia, you have a annual personal property tax that you pay for your vehicle as well. So those are some of the things to consider as well. All right, financing, your vehicle. So now that we've looked at the broader cost of owning a vehicle, we're going to move into the financing portion. So we're going to focus on the decisions that you make that will affect how much you pay over time. So some of the things you can control and some of the things you can, because that could be related to the macroeconomics. But it's important that you understand the whole buying process and you go in prepared. All right, so some of the things to avoid, when you're shopping for a vehicle. Oftentimes, when you open a door at the dealership, the first thing that they ask you is, what payment are you comfortable with? They're not looking to see how much you want to spend on a total. They're trying to see, okay, what if you say you're comfortable with $1,000 payment per month? Well, you didn't tell them how long you want to finance. You didn't tell them the price you were looking to spend. You said, I want to keep my payments at $1,000 or less. So the dealership's goal is to sell you a vehicle. So if you did not give them a price, then they're gonna find you a vehicle that fits into that $1,000 per month, and it may be at the longest term possible as well too. So those are the things that you want to make sure that you're not just shopping on the payment alone. You also need to know if you're pre-approved or want to be pre-approved, so you know what your budget can afford. How much, power do you have, spending power, buying power do you have when you go to the dealership? Because if your bank or credit union would only approve you for 20,000, but you're shopping for a $40,000 vehicle, then there's a $20,000 disparity that you're not factoring into your budget. Also, too, choosing zero down payment. You want to have some skin in the game. So like if you can afford to put in a down payment for your tags, title, and taxes, and any other dealership fees, i.e. the processing fee, then that will definitely help cut down on the financing cost long term. Rolling over another vehicle. So that's something to also think about. So if you're trading in, are you going to be upside down or are you going to have positive equity? Most vehicles depreciate. It's not an asset. So most vehicles, if you did not put a large down payment when you bought it initially, are gonna have negative equity, or the dealership is gonna try to offer you the lowest trade-in options. So you want to make sure that you're shopping around for that as well too. So shop around if you are gonna trade in or sell your vehicle. CarMax can purchase your vehicle. Carvana can also purchase a vehicle as well. So look at those online tools to get an estimate as to what your vehicle would be worth as a trade-in, and then you have that leverage when you go into the dealership and they say, well, I want to, we're going to offer you $10,000 for your trade, but Carvana and CarMax can give you $3,000 more. So you can use that leverage, say, well, Carvana and CarMax are offering me X, so I need you to match that, or I'm not gonna trade in my vehicle because you don't have to trade in the vehicle. And also, too, don't always show your hand as to what you're planning to do. First, negotiate your price before you say, "Well, I'm going to trade in," because sometimes they'll give you a higher trade in, but then they'll add that to your total vehicle price as well. So you want to negotiate your price first before you talk about being able to do any trade-ins. And then also too, making sure you're not overpaying for any add-ons. Processing fees are not required by law, so those are negotiable. So if the dealership is charging you, I've seen processing fees or dealership fees as high as $1,000. That's pure profit. So those are negotiable. Make sure you are doing your homework, and you can negotiate those things. All right. So, and why the pre-approval, matters. Like this is like probably one of the smartest things that you can do before you go to the dealership. Because as I said, a pre-approval helps you understand where you are budget-wise. It helps you understand the potential rates and terms because your credit has been pulled. You'll know what payment your budget can afford. And sometimes too, on paper, you can qualify for a lot. But if you were to factor in, well, as we talked about earlier, the cost of owning a vehicle on a per year basis, you want to factor that in as well, to build in, because if you say that you're pre-approved for 60,000, but the cost of owning a vehicle is averaging about $11,000 a year. So now you got to factor in you have to factor in like $1,000 a month on top of that for potential maintenance and depreciation and whatnot. So you might have to, go down to a $40,000 vehicle to be able to fit into your budget as well too. And then also too, when you're pre-approved, you are reducing any stress and you can focus on finding the right vehicle. And I want to make sure you take your time. I know sometimes, you go in on a weekend and you are in the dealership office for 8 hours, 5 hours, 6 hours. I've seen people, but take your time. It's the second most, it's the second largest uh, purchase that you make outside of a home. So you make sure you take your time. You're not doing impulse purchases on this. And so I'm going to also talk about what is the difference between a pre-qualification versus a pre-approval, because these terms get confused. Oftentimes, you'll see when you go online and you get and a fintech will say, you could get pre-qualified or no hit to your credit, check your rate. This is what is considered a pre-qualification because they're doing a soft credit pool and they're looking at some factors and they're giving you some general estimates. It does not mean that your final rate and your final payment is going to be that. It's just more of a here's some preliminary information. So that's how I would consider a pre-qualification. It's more of a preliminary versus a pre-approval. This is where your application has been submitted. There's been a hard inquiry on your credit report, so they have all of the data, information to be able to give you a definitive rate and estimated payment based on what you are applying for. All right. So 6 factors that can affect your auto loan rates. The biggest factor is your credit score because the credit score uh, simply determines what your interest rate is going to be. A credit score or it does not determine whether you get approved or not approved for a loan. That just only determines what your rate will be. And so some of the factors that you also need to look at for the rate is the loan term. Are you financing short term, long term? The shorter the term, the lower the rate. The longer the term, the higher the rate. Are you going to be putting a down payment? What is your loan to value going to be? That means the proportion of how much are you borrowing in comparison to what the vehicle is worth? Because some financial institutions have caps on giving you the lowest rate if you finance less versus if you want to finance the full cost, then they're going to bake in a higher rate for that risk. Mileage is a factor too. The vehicle age is a factor. So, those are the things that you want to take into consideration. And the lender, are you going to a credit union? Are you going to a bank? Are you going to a finance company? Are you going to a payday lender or title uh, company? The rate spread is vastly different and so make sure you're choosing the right options. Oftentimes, the credit unions offer the lowest rates at the lowest possible fees because we serve as a nonprofit, so not for profit. So our goal is to provide you with the best services at the lowest possible cost structure. All right, so this is going to be a scenario of if you financed $40,000 at 7%. These are just assumptions. And then what if you finance from 3 years to 7 years, what your estimated payment would be, and then what your total interest cost would be. So you could see that 7 year affords you the lowest payment, but also provides you with the highest total interest. Whereas uh, the 3 year has the highest payment, but gives you the lowest interest over the life of the loan. Typically, though, you want to look at what fits your budget. Are you going to be keeping this vehicle long term? Are you just going to keep, are you going to keep this vehicle on a shorter term basis? Shorter term for auto loans is anything that's under, 2 years. So you want to make sure, that you understand if you finance over 7 years, it also gives you the lowest payment, but it also has the highest risk because the depreciation is also the highest because you're not paying down your vehicle balance quickly enough to factor in the depreciation that is happening. So say that, in 7 years you wanted to trade this vehicle in, or say that in 5 years you wanted to trade this vehicle in, you may owe more than it's worth. So that's why I would highly recommend that you are financing at the lowest term possible that fits your budget. But like this is not like a one size fits all, strategy. So you gotta look at what is the best option for you. So now we're gonna look at which is the biggest cost to owning a vehicle, which is the depreciation and the negative equity. So right now, the average new vehicle price is you could just round it up to $50,000. That is astronomical, you know. And so you could see the depreciation that happens at year one, at year two, at year three, and and then year five. So your vehicle, on average, by the time you've owned it for 5 years, is going to be depreciating an average of 55%. So that's why it's important that you understand uh between, am I going to be purchasing a brand new vehicle or am I going to be purchasing a used vehicle? If you purchase a brand new vehicle, then right off the bat, you're going to be losing 17% of 16% of your value, like right off the top. Versus if you purchase a 3-year-old vehicle, then you've already missed the 39% reduction in that vehicle's value. So, that is I would consider a better deal because, you have saved, over $19,000 in depreciation over that, 3-year period. Again, the same concept. Open up your car window and just throw cash out of your window, and then it'll go into thin air. So, if your strategy is, I really don't have to have a new vehicle, it could be like new to me, then you can see that if you purchase 3 years or older, then you're going to have the best outcome of savings. All right, so now we're going to talk about buying smarter. Buying smarter starts long before you step onto a dealership lot. Today, consumers, we have access to too much information, I say. Before, we were thirsty for information. I feel like now we have too much information and are inundated. So, you want to look at the reliability, the ratings, the ownership cost, insurance estimates, resale values, um, uh, you know, pricing points, like all of this stuff is available online. One of the best resources that I've utilized has been Consumer Reports. They have all of that information and can provide you everything that I just mentioned. And like that's what I use when I purchase my vehicle. I use Consumer Reports and I've been very satisfied. So again, do your homework, look at everything and make the best decisions because the most successful buyers often spend more time researching than negotiating. So again, you want to research and be ready when it's time to buy. You don't have to spend too much time at the dealership or trying to find a vehicle. When you understand what a vehicle typically sells for and how reliable it is, and what is going to cost to own, then you're less likely to make an emotional decision and more likely to make a financial one. And I always say, leave your emotions at the door before you enter a car dealership because you will be a prey to the car dealerships because they can see if you give any ounce of excitement on the vehicles that you're about to test drive or your test drove, then it's like their radars go up. So, you want to make sure, your emotions are in check and then you are only making a decision based on your purse, your wallet at that point. All right. And some of the ways that we help our members is, we've partnered with TrueCar and we have a car buying service, and this helps to assist you with being able to do the research on if you're going to buy a used or a new vehicle. You can search, uh, through our car buying service. You can search at the inventory, you can compare prices, you can review market-based data, and when you're ready to purchase a vehicle, then you can simply within that car buying service site, you can submit an application to get your pre-approval. One of the biggest advantages of the car buying service through TrueCar is you have the transparency. You're walking into the dealership with pricing information already in hand, and TrueCar does some of the work for you because it does the negotiating for you as well too. So if you're not too savvy or you just don't have the time to negotiate, going through TrueCar, the car buying service is another way to save some money. All right, so before you sign any loan documents, before you sign the purchase agreement at the dealership, make sure you slow down and you read what you're signing, especially the purchase agreement, the purchase order, buyer's order. They have many name variations of it, but it's the same thing. Um, Make sure you are reading every line item that you have agreed upon because sometimes at the dealership they will try to sneak in things that you didn't think about because remember, they were trying to sell you on a car payment, not what your total cost that you wanted to spend. Buying a vehicle, I understand, can be very exciting. And sometimes, we rush through the paperwork because you just want to get home. You've been at the dealership too long. But this is when it's important to pay attention. If you're financing at the dealership or you're financing with the credit union or a bank, make sure you review your interest rate, your loan term, the amount that you financed, your monthly payment, any fees. So like if you ended up purchasing a gap or warranty, Make sure that is something that is what you wanted, or the price that was discussed with you. If something doesn't make sense, don't just say, well, I think this is, ask the questions. Stop. Ask questions. Um, you are your advocate. The dealership is not going to advocate for you, because at the end of the day, their goal is to sell a car and make money. So you have to be an advocate for yourself. Any good lender or any dealership should be willing to explain to you every single charge, every document that you're signing, and not try to rush you. Make sure make sure their hands are not covering any documents, or they're glancing through them quickly, because that can be a sign that there's something hidden. Because once you sign, then you have agreed to it. All right, so next we're going to be managing the unexpected vehicle cost. You know, even after careful planning, uh, you don't know, you roll the dice, so you don't know what your total ownership cost is going to be, and there's uncertainties. Accidents happen, vehicles break down, parts wear out. The question is whether unexpected expenses will occur, but are you prepared for it? Do you have it budgeted, or are you just relying on a prayer that everything will be okay? So that's where protection products enter the conversation. They're designed to address any risks that may arise during the vehicle ownership, and they're there to give you peace of mind in the event that something happens. And you also have to make sure, when you're looking at purchasing optional protection products, they have to make sense for you. Because I know at the dealership, they'll try to sell you every warranty known to man. So, you want to be make sure, like, it's going to make sense. It's going to be beneficial to you. Understand what it is, how it works, the costs, everything that's associated with that. So, when unexpected happens, then you can be more prepared. So, because many drivers don't fully understand or appreciate how expensive a major vehicle event can be until it happens. Even the most reliable vehicle will break down. There's no such thing as 100% reliability. So, transmission replacement can cost several $1,000s. The advanced safety systems and the electronics that every single vehicle has now are more expensive. That's why, the cost of owning a vehicle has increased. The cost of insurance has increased, because normally, if someone is in an accident, and they have, most times, if the accident is severe enough, or I've seen where accident has not been severe, and the insurance company has totaled the vehicle because of the electronics and the cost it would take to be able to fix those as well. So, think of those things as well. So the purpose of planning, isn't to expect the worst, it's to avoid any financial surprises and what can be unexpected. So what we're going to briefly talk about, gap, and I'm sure everyone has heard of gap, but if you haven't, gap is exactly what it is. It is a placeholder that steps in the event that your insurance company does not pay the balance that's owed on your vehicle. So if your vehicle is stolen, declared a total loss, um, the insurance company will pay what they call residual value, not what the actual value is. So those are the things that are two different, like what the retail value in JD Power is not what the insurance company pays. They pay you a residual value, which is different. That's why oftentimes um, insurance checks are less than balance owed, and that's where gap. Um, there's always a gap, and then if you do not have the gap protection, then you would be on the hook. So, like in this example, say that you owe $26,000 and the insurance company paid only 20,250, then you would be on the hook for $5,750 if you did not have the gap protection. If you did have gap, then your cost would be zero. So imagine, if you didn't have gap, you would be paying on a vehicle that you don't have anymore. All right, and when gap matters, when you have a low down payment, even with consumers who put down 20%, I've seen that gap is still recommended because of the depreciation and also depending on the gap that you're purchasing, it may have some additional benefits that can make it worthwhile to have. Longer loan terms, as we said, your vehicle depreciates. So if you have a 7-year loan, your payments are not keeping up with the depreciation to lower your balance. Higher interest rates, that also plays a part because higher rates also uh, slow down the repayment of your balance as well too, because more goes towards interest than the principal. If you're rolling over negative equity from another vehicle, that also could be a reason why you would want to add gap. And then also to the rapid vehicle depreciation that varies by make and model. So you want to check that out to see what is the average depreciation for that vehicle that you're wanting to purchase. Okay. Here at US Senate, we offer GAP as an option to our members, and for us, it's called GAP Plus. And what GAP Plus does is it covers you for it covers the loan and protects the loan. So gap covers the loan and warranty covers the vehicle. So those are the main differences that I want you guys to understand as well too. And then we offer it can protect you up to $50,000. So that means like so you may have a potential negative uh gap of up to $50,000, the gap would pay. So say that you bought a vehicle for 100,000 and then it's a total loss. And the insurance company says, well, we're only going to offer you $50,000. So insurance pays 50, you have a balance of 50. So that $50,000 would be covered by our gap uh, program if you have that. Also, too, it comes with deductible assistance. What that means that if you do not have a total loss, or it helps cover your deductible when you have any repairs that you do to your vehicle from a non-total loss event, up to $500 as well too. And then if you end up totaling your vehicle or your vehicle is stolen and not recoverable, then if you take advantage of the gap, then the plus portion of it will give you $1,000 towards the next vehicle that you finance with US Senate. And our gap is available on consumer vehicles. We also offer it on our recreational and boats as well too. And then it is actually a fraction of the cost at the dealership. On average, the dealership it was about $1,000. I've seen it as high as 1,200, 1,500, depending on who's selling it. So, but with USN, it's at $599. Next is the mechanical repair coverage, also known as warranty. this covers the vehicle, and you could see the breakdown of what potentially the cost of would be to fix and repair your vehicle. So instead of focusing on total loss situations, the warranty helps with covered repair expenses after the factory warranty has expired. And here you assign that we offer a factory type protection as well as a powertrain option as well too. But so if you think about it in this way, as we talked about earlier, these vehicles are very sophisticated. There's a lot of touch screens, buttons, sensors, and everything's adaptive. Is advanced. So you want to, everyone has keyless fobs, remote starts. So you want to make sure that are those is that something that you can afford to pay? Like we had a member who had purchased warranty, um, and their dog kept eating their key fob, and each time, and this member owned Mercedes. Each time the the replacement of the key fob was $800, and they ended up using it about 6 times. And then the member, felt so embarrassed that he would have to, to kind of be like, hey, my dog ate my key fob again. But because they had the warranty option, it was covered. So every time they needed a key fob replacement, it was covered. So think about in those situations, like you may not have a repair in the moment, but it also covers other things that you didn't think about. And also too, um, the average consumer does not have um the the funds to pay an emergency. About 7 in 10 consumers cannot, make an $1,000 emergency payment. So if something costs over $1,000, then how are you going to pay for it? Because most of the time, vehicles are our avenue for going to work. And we need to work to be able to pay the car payment, to be able to pay the house, to be able to put food on the table. So, it's important. All right. So when does it make sense to purchase warranty? When you're purchasing a used vehicle, when your current warranty is expiring. So say that you purchased a vehicle at the dealership and they gave you a remaining term warranty. So that's something to think about. If you're planning to maintain your vehicle for a long time, you have a lot of advanced technology. Again, most of these newer vehicles have a lot of advanced technology. Once that factory warranty expires, then the cost of replacement is expensive. Your vehicle is high mileage, or you're planning to keep it for long term, and it's gonna have high mileage. So those are the things to consider as well too. And also too, warranty is transferable to, so if you're going to sell your vehicle to a private person, you can, I believe the cost is $50 to transfer to the next owner. So you could use that as a selling point if you're selling your vehicle, through a private purchase. Um, and because that could be where you can get more out of your vehicle as well too, if you have a warranty. So the next poll that we're going to be doing is, how long do you typically keep a vehicle? So if you want to select the options there. Here we'll give it about 30 more seconds. And the average consumer keeps their vehicle between 18 to 24 months. And again, I'm saying average because there's consumers that will keep it till the wheels fall off. Personally, like I like to keep a vehicle until the wheels fall off. So because I also don't like car payments, so I want to be able to pay off my car and keep it as long as I can. All right, great. So, from the poll, we have about uh, the audience about 7 to 10 years is what they keep their vehicle. So, this is actually a great way to know that potentially and having an extended warranty would be a great option, and you can add this at any time. You don't have to add it at time of the loan. You can add it after your warranty has expired with the manufacturer as well too, and so those are options for you as consumer. All right, and then to continue a bit more, our warranty is a bit unique because it covers hundreds of components. We have one that's called named exclusion. That's like our factory type. That one, will only list what's not covered versus some of the ones when you get to the powertrain it'll only cover the major components. You can go to any certified ASC certified mechanic. It's 24/7 roadside assistance. As I said, transferable and it's available. Um, Whether you have a loan on your vehicle or you've paid it off, you can purchase warranty. You don't have to have a loan. You don't have to have a loan here. If you have a loan somewhere else, you could purchase, the warranty through USN as well too. Then our options are platinum, which is our factory type, and then gold. This is powertrain plus additional benefits, and then the silver is our where it covers the powertrain major components option. All right, so we've covered a lot of ground today. We've discussed financing strategies, vehicle shopping tools, ownership costs, and protection options. So let's finish with a few practical steps so that you can have a smooth vehicle purchasing down the road. So again, before you hit the summer uh road, before you hit the road this summer, some of the things that you want to make sure you're always checking is your tires and your pressure, because if your tire pressure is not right, then you could be spending more on gas. It could, cause potential, flats as well too if you hit that pothole. If you come up here to New York and New Jersey or Rhode Island or Massachusetts, pothole alley up here. So, making sure your battery is performing. You could go to auto advanced auto or AutoZone. They could do a free battery testing for you as well too, making sure your cooling system is working properly, your brakes and fluids, AC, your windshield is not cracked, and also too making sure you have things ready for roadside assistant. One thing that I always have in my car is a portable battery jumper, because now like you don't have to wait for someone to come and hook their car up to your car and then jump your car. Now they make, portable battery jumpers, and those are a life changer. All right, and then also too, if you already have a vehicle financed, you could also look at refinancing to lower your monthly payment, reducing your interest rate, and also you could accelerate your loan payments to pay off your loan faster, and also, well, when you refinance, you could free up some room in your budget. Um, and because if you purchase a vehicle and you just want to do the transaction quickly, you finance with a dealership, we have the best options for you to refinance as well. Okay. And currently, yeah, in honor of America turning 250 years, we are offering up to 250 cash back if you finance a auto loan, $10,000 or more, and you purchase Gap, then you will deposit $50 into your U.S. Senate savings account 30 days after the loan is funded. If you purchase a warranty, then we'll deposit $200 into your savings account after 30 days of loan funding. If you purchase both, then you'll get $250. Our promo code is Celebrate 250, and this promotional offer is good through end of August. So you have plenty of time if you're in the market to find a vehicle. We do offer some great options for you. So again, like I want to thank you for taking the time to be part of this presentation. We hope, we've given you some great information. Any questions that you may have, please reach out to 800-374-2758, option 4 for lending. If you send us an email at services@ussfc.org, or go to our ussfc.org/auto page to find out more information on ways we can assist you. Thank you so much.
Thank you so much, Elton. What a great job. Thank you so much. I tell you, every time you present one of our webinars about consumer loans, whether it's cars, personal loans, I always learn something myself. So, not only here at the credit union do we want to make sure that the process is simple and that you're taken very well care of, we also want to save you some money and put some money back into your pocket. So, great job. Thank you. And I'm going to turn it over to Carrie for any questions.
Okay. Thank you, Elton. Good job. We have a couple questions. One I answered, but I'm just going to make sure you back me up. Is there a fee to use TrueCar?
There's no fee.
Okay, this next one's a little tougher. If you get a pre-approval from TrueCar and then find or negotiate a better rate
Mhm.
elsewhere, will USSFCU match the new rate, the external rate you found?
Yeah, so that is a great question. So here at US Senate, we do offer what we call a rate match program. Um, so potentially we can match and beat that rate, but it depends on what your rate is with us and what your rate is with that other financial institution. I'll give you a perfect example. Say that our lowest available rate is 4.99 for 5 years, and then you submit an application here at US Senate, and based on your credit score, your rate is 6.99 as an example. And then you say, well, I want to shop around. So you go and shop around to XYZ financial institution, and they offer you a rate of 6.24. Okay. You bring that to us. And then at that point, we will look to see if we could do a rate match slash because our rate match program cannot go below our available floor, which is our lowest available rate. So we offered you 6.99, you got 6.24. Our lowest is 4.99. So we would be able to match and beat it and offer you the 4.99 based on the criteria of our program. So that is available. Because again, we want to take care of our members, and that's something that we try to be diligent to offer you our lowest available rate from the beginning, but sometimes your credit score is what's affecting that rate, and your loan term is what is affecting that rate as well too. So, those are some of the things to consider.
Thanks, Elton. Are
Absolutely.
vehicle prices and vehicle rate loan rates expected to improve anytime soon?
Well, that is a great question. The given the macroeconomics of what is occurring, because the economic data shows something different versus what reality is out there. The rates are projected to maintain to where they are right now, with depending on if inflation continues to creep up, it may increase, not because we increase them, but based on what the market conditions. Because interest rates for auto loans are dictated by market forces. They're not dictated by the Fed funds rate, because the Fed funds rate only affects variable rate products like a credit card or a home equity line of credit. Because the Fed funds rate decreases or increases does not mean that auto loan rates will decrease or increase, because it's based on the market forces out there. Vehicle prices, they're continuing to fluctuate up. I have not seen vehicle prices going down. I've not seen vehicle prices staying stable, especially like with the used vehicles, like that price is also increasing as well too. The new vehicle prices are also increasing as well too. And a lot of times it's based on consumer demand. It's so like if the consumer is willing to pay those prices, and the consumer is demanding additional bells and whistles that go into a vehicle, all this advanced technology, then that's gonna be passed down to the consumer, because the consumer, quote unquote, can still support that. But it doesn't mean that's reality for most people. Because having $1,000 car payment on average, if 20% of the consumers who have bought a vehicle are spending $1,000, that's a huge impact to your budget. And if you have an SUV, you're paying between $4 to $5 a gallon in gas, then that could be a hit. So yeah.
Elton, is refinancing a hard hit to your credit?
Say it again, please.
Is refinancing a hard hit to your credit?
If you submit an application, anytime you submit an application, it will result in a credit inquiry, and a credit inquiry may impact your credit score on average between 10 to 30 points.
Can you use the pre-approval service to see into refinancing, or is that just for an auto loan?
No, yeah, so for the auto loan, you can go through the pre-qualification process. So you go through the pre-qualification process, and then if you want to submit an application, then you can submit the application. And then at that point, you can still be pre-approved for a refinance. It doesn't mean that it's only for new purchases.
And I'm sorry, I meant to say pre-qualification, the with clutch, bro. I know that's what we call
Yes.
it.
Yeah.
Okay.
Yes.
Okay.
Yep.
I'll throw that link. Is it okay to put that link in the chat, the loans
Mhm.
that you that
Absolutely.
way if someone was interested in refinancing and don't want that hit on your credit, or same for the auto loan, you could kind of see
Yeah,
where you land.
so remember the pre-qualification, you can see any offers before you submit the application. Once you submit the application, then it becomes a hard inquiry. So while you are in that portal, pre-qualification portal, you can look at your offers. But if you are wanting to proceed and submit an application, then that turns into an inquiry. And also, before you go through the pre-qualification process, make sure your credit report is unlocked through Experian because if your credit report is locked, you will not be able to get any pre-qualification offers to review.
And one last question that I see, when is the best time of the year to shop for a car?
I would say the best time to shop is when you need a vehicle. I don't buy into the hype of, like, oh, shop during the summer season or shop in the winter or shop, you know, some, some consumers will say, well, when the dealerships are going to be converting, the where they're getting the newer models and they're gonna have the older, the last year's model on sale. You can still get a deal, either way. The best way to get a deal is making sure you don't go on a weekend. Go during the week. There's the slowest time for a dealership is usually Wednesday, or Thursday. So, but like the weekend, like you'll have less negotiation because there's consumers who are willing to pay for a vehicle.
All right,
I'm
well,
sorry.
that is all that I see for the questions. I will send the presentation slides and hopefully the recording out tomorrow for anyone who wants to review what we covered. And I'll hand it over. Thank you, Elton, so much. And thank you, everybody, for being here and for the questions. And I'll let Kim say the final farewell.
If I can get myself off mute.
She's
Sorry.
bad with
I'm
goodbye.
so sorry. I just want to say thank you again to Elton. Thank you so much to our attendees who came in this Wednesday night and spent a little bit of time with us. Also, want to let you know of next week's webinar. It is Protect Your Digital Identity. It's a guide to cybersecurity and fraud prevention. Again, same time, same place. Your digital identity is constantly being targeted by, scammers, cyber criminals. So if you want to, or you have anyone who wants to, join us for this workshop focused on recognizing those common scams, protecting your information online. It's so critical in today's age, and strengthening your password security and building safer digital habits. So feel free to RSVP, tell your friends, tell your family, tell your neighbors. These webinars are free to anyone. We want everyone to be financially well. So we always say no members, no credit union, and I extend that to say no attendees, no webinars. So again, Elton, you are amazing. Thank you so much for your bringing your knowledge, your expertise to this webinar. Carrie, thank you so much for the PowerPoint presentation, and we will see you next week.
Thank you, everybody.
Thank
Have a
you,
good
Night.